What is going on, guys? Welcome to the RSI and Fibonacci lesson of this technical analysis course. We've already covered the relative strength index and the Fibonacci. We know that the relative strength index is a very powerful indicator to be able to show us momentum and price movement. And we know how powerful Fibonacci is, where it originates from, and how we can use it to find supports and resistances in the market. And all of these combined together can be extremely powerful. This is a tool and this is a method that isn't used by 99.9% of traders. I honestly don't know anyone else that uses this apart from one of my friends, and we've basically backtested it a lot, and we've taken a look at it on many different time frames. You can use it to basically scalp on the lower time frames. You can use it to swing trade on the high time frames, and it's really something that I've kept to be able to make a video on for the course, because if you have picked this course up, I want to give you guys some original things that you may have not heard about before. So in today's video and in today's lesson, I'm going to be introducing to you the RSI and Fibonacci, and we're not really going to have to go through any theory because we've already done that throughout the videos. So I'm excited to show you this one. So let's get right into the charts right here. We are on the 1 hour time frame for the Bitcoin, but I want to show you a low time frame to show you that these can work on any given time frame, guys. It doesn't have to be just on a high time frame. And what I like to do is go down to my RSI here, and what I do with the RSI is I actually put from the 14th length, I put it to the 22 length. This is only for this strategy for Bitcoin. I like to use the 14th length because it's a lot more accurate, especially with divergences. But as you can see, when you use the 22 length, it slows down the signals and it slows down the movement of the indicator, as you can see. So we've found most success with the 22, but you can also use the 14. There is times where the 14 actually acts better, and there's a great example right here that I'm going to show you. So what do we want to do? We want to grab you always, just a very quick reminder, because this is something that I want to put in you guys' heads. When you use Fibonacci, you want to pull from the left to the right. You never want to pull from right to left. That is incorrect. You want to pull from left to right, okay? That is how you pull a Fibonacci, from left to right. I don't care if you're doing it from down here. You would have to go like this, right? Just as an example. So always from left to right. So let's pull one from left to right, and we see our levels on the price action. We actually just came up to the 0.5, went past it a little bit, and then got rejected. We want to go on to the RSI, and we want to actually click on it so we have a perfect Fibonacci here. And from the ultimate high, we pull from the left to right. And what happens is we actually come down. How beautiful is this? We come to the 0.618, 0.65 golden pocket and get rejected. Absolutely amazing. If you were at the golden pocket on the price action, you'd have a little bit more confidence, right, in your short position, or maybe you'll add a little bit more. But if you were looking at this on the RSI, you would know that we're hitting the golden pocket on the RSI. I may need to put in some short position. Almost anyone, like no one would be looking at this. This is something that would not be looked at by most market participants, right? So going back to it right here, we want to go look at a bullish retracement now, but we want to look at it on the 14 length because the 14 length works as well. But over time, we've found more success with the 22 length. So we want to go from this ultimate low. So we want to pull from the left to right. And where does the price action come down to here? It actually comes down to the 0.5, but we want to pull it from this high actually. Okay, so because we ended up continuing up, and then we want to go onto the RSI and pull from this low to this high. And what do we see if we do that, guys? We see an absolutely beautiful thing, because we had an ultimate low here. We got a hammer candle, started moving to the upside. Our ultimate high here, we retraced to the 0.382, which is a great area to retrace if we are very bullish, and we bounced from the 0.382. But what's interesting is that even over here, we kept retracing to the 0.618 on the RSI. So this would have given you that much more confidence that the price action is all the way at the 0.382. We know that we hold the 0.382 when we are in a bullish trend. For example, if you go through and you do multiple Fibonacci levels from every single pullback that we had on the $3,000 to $14,000 high for Bitcoin, you will see that we keep retracing to the 0.382. So looking at this, this is only on a 1 hour time frame, but we had an uptrend. we retraced to the 0.382, and more importantly, we retraced to the 0.618, 0.65 golden pocket on the RSI. So absolutely beautiful. This worked out very, very well. And then we bounced up and we went up for about, let's see, for about 3%. Very nice on a 1 hour time frame, is it not? So let's get rid of it right here. So you can see as you start trading, guys, as you start finding out more things, trading just gets more beautiful and more beautiful, especially technical analysis. Like these things, just learning these things can give you some very high confluence trades. And if you look for more things, then it's just going to be better and better. You don't want to be just blindly entering a trade just because you see the price action at the 0.618, but you want to look for other confluences with exponential moving averages, etc., which we do talk about in the psychology section as well. So right here we have the ultimate high, and we've pulled a fib from the ultimate high down. Okay, so that's what we've done. From the ultimate high to the ultimate low right here. So we're looking for a bearish retracement right now. And we want to go on to the 22 length because 22 length works the best, as we have seen. And what happens is we actually hit this, you can see right here. Let me grab right here and right here. Okay, so that's from the ultimate high to the ultimate low right here. And it is a little bit different on the RSI, but it's just going to be because, this is not the ultimate low on the price action, but it is on the RSI. Let me get rid of the volume so you can see. This is not this is the ultimate low on the RSI, but this is not the ultimate low on the price action because, of course, we got divergence and we ended up bouncing up. So looking at this, where do we come down to on the price action? The price action came to the 0.382. So if we wanted to stay bearish, it goes both ways. If we wanted to stay bearish, we're going to come to the 0.382 and then reject. So we came up to the 0.382 on the price action, but more importantly, we came up to the golden pocket on the RSI. So I want to see this RSI golden pocket very closely to give me some nice scalp trades. And once again, remember that we're on a 1 hour time frame, but catching a 1.8% move without leverage is not bad at all. Compounding profits is very, very powerful. Then we come past, but we hit the 0.618 once again. So it gives you another scalping position for another 2%. Okay, so you use Fibonacci levels and support and resistance to take profit as well. So what happened here? We came up to the fib level, we got rejected. Why would you take profit here? Because we know that this is resistance and now it turns into support. So let me get rid of this. I don't know why it's like this and like this. So we know that this area was our resistance over here. So we broke it, and coming back to it, it turns into support. So we want to take our profits here. Then we go up and we do the exact same thing. So just looking for confluence, guys, looking for goods to take profits. It's not just blindly looking for a complete reversal, especially on a 1 hour time frame. You just want to look for confluence. So very, very beautiful little tool here. And let's go on to Chainlink now. So we want to look at this huge dump that we had from about $4.97 all the way down to $1.54. So going from this ultimate high, I've already got it drawn here. So going from this ultimate high all the way down to this ultimate low, what happens is we're actually looking for a bearish retracement. Okay, and let me see. So let's pull this from the ultimate high to the ultimate low. You can see, where does the price action actually retrace to? So we did move up very nicely and we were in these long positions here, but it doesn't mean that we may have two accounts and we may be scalping positions. And right here we come to the 0.786. The 0.786 coinciding with the price action, that's a rejection level, but not by itself. I wouldn't blindly trade off that area. But then what do you see on your RSI? You actually see that we're on the 0.618. We really care about this golden pocket. You can use other levels on the RSI with the Fibonacci, but we really care about that 0.618 and that golden pocket. We come up to it, we retrace. As soon as we hit this area, we come up to a perfectly retrace. And what happens on the price action? We come up to the 0.786, two pieces of confluence right here. And we had our resistance, mind you, we want to look for confluence a lot, and we had our support down here, which now retesting it once again is going to act as resistance the first time, is it not? Most likely it will. So what do we have? We had three pieces of confluence here that we can see right now. A 13% move to the downside. Not bad at all for a little bit of a scalp position, is it? We knew that our moving average was still was starting to get a positive sloping, so we weren't going to stay in that trade. 13% without leverage, we're happy with it and we're good to go. So let's look. I haven't really looked for any others, but let's look for some more. Let's see if we can find any more. So for example, we could go from should we go from the ultimate high here to the ultimate low? We want to go from the ultimate high to the ultimate low, and then go from the ultimate high here, right here, to the ultimate low right here. And the price action actually went past a little bit from the 0.618, but the price action was at the 0.618. Why does that look blurry right here? Can you guys see that? That's a little bit odd, but anyway, we came up to the 0.618 on the price action, so we have a confluence of the golden pocket on the price action. We can assume that if price action comes up to here, we're going to get rejected. There's big orders lined up here. What can we see on the RSI? We can see that we did go past it, but we hit another fib level, the 0.786, which is also a very important level. Not as important, but we have two pieces of confluence. Golden pocket on the price action, 0.786 on the RSI. And then what do you know? We actually come down, and then the next retest, we actually lose a little bit of momentum and we stop at the 0.618. So this was your confirmation for entry of your short position. So you could have caught one short position over here for about 30%, assuming you traded it perfectly, which is not always going to be perfect. And if we go from the top of the golden pocket all the way down for 25% when we hit the golden pocket on the price action and the golden pocket on the RSI. So I have found that when you see both of them line up together with the golden pocket, it is usually a very nice trade. So that's really about it for this one. Go ahead and explore it. Go ahead and find out what works best for you. If the 22 length works best, if the 14 length works best, but I would recommend using the 22 length, but it's really up to you and what suits your trading strategy. So I hope that you guys have enjoyed this very short lesson in comparison to the other ones. We've already gone through the theory, so I just wanted to put this out there and show you guys how to use it. Thank you so much. I appreciate your time, and I'll catch you in the next lesson.